We're here today to discuss the increase in regulatory enforcement by futures exchanges. I'm Meltem Kodaman, counsel at Sutherland, and I'm here with Greg Kaufman, a partner at Sutherland. Greg, derivatives exchanges have long been enforcing their rules and regulations. What, if anything, has changed?
That's right, Meltem, they have. But what we've seen is just more aggressive enforcement of their rules. And it's not just against speculators in the market, it's also those that just use the markets to hedge risks. So if you're a risk manager or you're a procurement professional, you're subject to the same rules as everybody else. And what we've also seen is just more cases being brought by the exchanges.
What do you think is driving this more aggressive posture?
I think it's two things. I think it's pressure from the United States Commodity Futures Trading Commission on the exchanges. They do regular rule enforcement reviews of the exchanges. That puts a lot of pressure on them to be aggressive in enforcing their rules. And secondly, these are global markets being traded 24 hours a day by more and more market participants, more opportunities to trip up.
Are there any other trends you've noticed?
Yes, and as I alluded to before, it's who is getting caught up in these enforcement reviews. It's not just the speculator. It is the end user, or what we call the pure hedger in the market. So if you're an airline and you're hedging jet fuel price risk, or if you're a consumer goods manufacturing company hedging the price of aluminum that you use in your products, or an insurance company hedging equity or foreign currency risk, you're subject to the same rules as everybody else. And what we've also seen and what we're keeping an eye on is the monetary penalty levels. With the CFTC, we've seen really explosive growth in the level of monetary penalties. We haven't seen that yet with the exchanges, but we're watching, and unfortunately, we do expect that to happen.
Well, given this environment, what type of market conduct should companies be concerned about?
There's a lot to be concerned about, but I'll touch on three important areas. The first is wash trading. We see a lot of wash trade cases. Wash trading is the simultaneous purchase and sale of the same instrument at a same or similar price. Very common in the markets and very easy for the exchanges to detect. Secondly, our exchange for physical transactions, or EFPs. And EFPs are two-legged transactions where the futures go one direction and the physical commodity goes the other. We've seen a number of cases where those rules are not being followed and the exchanges are enforcing those rules. And lastly, disruptive trading, which is actually a pretty broad category. It captures a lot of activity. But one area that's getting a lot of attention is spoofing. And what that prohibits is the entry of an order with, at the time of entry, an intent to cancel that order. So you have to make sure that when orders go into the market, there's an intent to execute that order. Doesn't mean you can't change your mind after you've entered the order, but it can't go in with an intent to cancel.
Are there any other trading practices that hedgers trying to manage their risk should be aware of?
I wouldn't call it a trading practice, but supervision is something that the exchanges are really focusing on. They want to know what supervision was in place prior to a violation, and they want to know what steps are being taken supervision-wise to prevent future violations. So now's a good time to be thinking about the policies and procedures that you have. Are they adequate? Are you training your people on those policies, procedures, and the rules of the exchanges that you trade on? And have you set up surveillance or monitoring to make sure the rules, the policies, and procedures are being followed? This is the time to do it. If you wait until being contacted by the enforcement arm of the exchange, you've waited too long.
Thanks, Greg. That's all very helpful information. On behalf of myself, Meltem Kodaman, and Greg Kaufman, we thank you for watching this video. For more information and other bottom line videos, please feel free to contact either of us or to browse further on Sutherland.com.